Today in crypto, Bitcoin sees a very strong rejection at a key level of resistance. The price of Bitcoin pre-halving could still see some very serious price action. Dangerous regulations are being discussed, which could definitely hurt the crypto industry big time. And one of the world's biggest football clubs dives into crypto. The cryptolark. This is where you subscribe for all of the hottest and the latest happening in crypto land. So let's go ahead and start off by taking a look over at the charts. So we can see on the daily that Bitcoin got rejected at the $10,540 line, which is a very strong line of resistance back from the China FUD days of late last year. We need to see Bitcoin cross over that line and kick this key resistance in the butt. If we can cross over that and close above it, then we'll be able to flip that resistance into support, which would provide a very strong base for testing the $11,000 area. Also, the total market cap of all cryptocurrencies briefly crossed over the $300 billion mark yesterday, although it was quickly rejected. That being said, we are certainly building up some very good momentum for this coming bull run. Just for a bit of perspective, the 2019 market cap of all cryptocurrencies reached just a little over $380 billion. The 2017 bull run topped out near $760 billion. So yeah, we still have a long way to go to get back to those kind of levels, but we will see the crypto markets cross that $1 trillion mark. The only question is how long it's going to take. And I wanted to share one more thing with you before we move on to the top news stories. So let's take a look back at Bitcoin 88 days out from the previous halving, because we're 88 days out now from the coming Bitcoin halving. We can see that a lot of the price action came much closer to the halving itself, with most of the price action actually happening about 6 weeks before the halving and then running up in that time zone. Now this is kind of a typical news hype, buying the frenzy kind of thing that we see with that. So if the 2020 halving hype cycle is anything like it was in 2016, then looking into the post-halving area, we could see a drawdown of up to 30% from that $15,000 to $17,000 level if it does indeed get that high. But yes, I still think we are going to see $20,000 Bitcoin. It's just not going to happen before the halving, so look for that later this year. And one of the many reasons why the markets in 2020 are so poised for big growth and are very different from back in 2017 is particularly because of the massive liquidity that has built up over the last couple of years. I mean, just looking at Tether and the growth of Tether is actually a great example of this. So in 2017, we had around $400 million in Tether issued out leading into the bull run. Now we have 4.6 billion in Tether living across multiple blockchains, including Ethereum, Omni, Tron, and Algorand. And while Tether remains the stablecoin king, we have definitely seen a lot of very feisty competitors coming up, particularly USDC, which is the second biggest stablecoin. We also have Paxos and DAI and a whole bunch of other ones. Combined, they are all worth about $1 billion together, and almost none of the other stablecoins even existed back in 2017. This bull run is going to be way crazier than the last one. So, be prepared. Okay, let's get on to the first story of today. BlockFi has raised $30 million in a Series B round led by Peter Thiel's Valar Ventures. The new funding will help the firm to expand both its product offering and its geographic footprint. BlockFi has plans to develop a mobile app and the ability to send fiat wire transfers as soon as the end of this quarter, and ACH payments coming in Q2. And of course, that Bitcoin back rewards debit card sometime later this year, which is definitely some very exciting stuff. And if you are not signed up to BlockFi yet and you want to start earning 5.1% annually on your Bitcoin, 3.6% on your Ethereum, 3.8% on your Litecoin, and 8.6% on your dollars, then click on the link down below to get started earning a passive income on BlockFi today. Okay, now let's move on to the financial crimes watchdog over in the US is preparing significant crypto rules. Sadly, we don't have many specifics at this time what is actually in this, but there is a proposed budget increase in monitoring suspicious cryptocurrency transactions and prosecuting terrorists and other criminal organizations financing illicit activities with cryptocurrency. All the same old boogeymen that we know from before and always get rolled out every time they talk about cryptocurrency regulation. It's money laundering, it's terrorists, all this bad stuff. Look, Mnuchin, he is definitely no friend of crypto by any means. Quite the opposite. He is the number one fanboy of the dollar. I mean, it's his job after all. He went on to say, we want to make sure that the technology moves forward, but on the other hand, we want to make sure that cryptocurrencies aren't used for the equivalent of old Swiss secret number bank accounts. That's what Bitcoin is. Bitcoin is a Swiss bank in your pocket. Now, it sounds to me like he just pulled the old blockchain, not Bitcoin line. Real original, dude. Real original. Fedcoin is coming. Be ready for it. It's only a matter of time before they roll that garbage out. Now, this statement comes just a couple of days after this headline about the Secret Service now being tasked with investigating crypto crimes. Now, on the face of it, you may think, wow, that's frickin' awesome. Finally, someone's gonna get up and go after those scammers on YouTube running the fake giveaways, scamming people out of their money. No, silly, that's not what's happening. They don't care about protecting regular people. The mentions in the budget proposal were really focused on how to ensure that the sanctions regime stays in effect, talking about how to prevent Russian billionaires from going around the sanctions regime and how to prevent Iran or Syria from evading U.S. sanctions. It's all about power and money and control. It has nothing to do with regular people or protecting regular people. Now, what this will actually mean long term is anyone's guess with the Secret Service getting involved in crypto transaction monitoring, but the U.S. government is definitely keeping a keen eye on how its adversaries are using public networks to transfer value and, yes, to evade sanctions. And crazily, I have one more story about regulation for you today, and this one is, this is a doozy, this one. The International Organization of Securities Commission, or IOSCO, is calling on global regulators to get tougher on crypto exchanges. Now, beyond the obvious, stricter KYC policies, which KYC policies are already pretty strict to be fair, the watchdog has even suggested that regulators should consider restricting crypto asset trading platforms to working with regulated intermediaries trading on behalf of their clients. Now, what does that mean? That means that you would need to have middlemen. This would be crushing beyond imagination to the crypto industry because one of the great parts is the openness for anyone to just go and be able to buy Bitcoin. Imagine if you had to call up a broker every time you wanted to buy $50 worth of Bitcoin. They take their fees and all this stuff. It would kill small investor access to the markets, and it would put in a middleman that would just be there to just rape you on fees for no damn reason except that some regulator put them in there to protect you. Yeah, right. It would be a terrible burden on the industry if it gets passed. I mean, look, at this stage, it's just a proposal, right? This is not binding policy yet or anything like that. It's just the conversations being had, but it's certainly a dangerous direction for the conversation to be heading in and would add even more burden onto the crypto industry after the Financial Action Task Force cooked up the crazy idea of implementing the travel rule for the cryptocurrency industry, which would require, in case you don't know what the travel rule is by, which would require identity verification for every send and receive from exchanges and wallet providers. That is in the process of being implemented, which is already draconian and totally crappy for the crypto industry. This would make it only worse if IOSCO's stuff actually comes through. And all these rules to protect us from the big, bad money laundering boogeyman, it's ridiculous. Because every year, banks in just London, they launder unbelievable amounts of money. And it's all done in fiat, all through the front door of the bank with a wink wink and a nod nod. It's funny how all these regulations have not stopped that from happening when it's an open secret. Everybody knows it's happening, and yet all these regulations can't stop it. Funny, isn't it? It really just comes down to who controls what and where the power flows. Thankfully, governments don't control Bitcoin, which must be endlessly infuriating for them. That is why we are seeing these kinds of proposals put forward. They're trying to do anything possible to try to contain Bitcoin, but Pandora's box is open, and it's not going to happen. But sadly, also, sometimes industry players in crypto can really provide regulators with the exact kind of fodder that they need to try and cook up the need for all these regulations. I mean, just look at this story from BitMEX today about an XRP flash crash over on the platform. So the XRP USD pair quickly plummeted from around 33 cents all the way down to 13 cents, basically wiping out a massive amount of traders within a few seconds. This kind of super shady BS is not good at all. I mean, if BitMEX were a US regulated exchange, then surely there would be some kind of investigation going on to figure out just what the heck actually happened. But there will be no investigation. There will be no good answers to why so many people lost money on that, why those liquidations happened, why that flash crash happened. Just sorry about your luck. Better luck next time from the team over at BitMEX. Meanwhile, this is how the CEO of BitMEX has been discussing XRP publicly over the last couple of days. I mean, look, crypto is it's the Wild West in so many ways still. And yeah, there's a great amount of companies out there that are working to bring a lot more professionalism to the industry. But this kind of general crazy, it remains very prevalent in crypto, unfortunately. Okay, our next story is from the guys over at IOTA. Now, on the back of a scandal-filled week with fighting between the founders over who owns what and who deserves what in terms of money and IOTA and all this stuff, the IOTA Trinity wallet has just been exploited with possibly more than $1 million in IOTA Hacked. Now, in response to this happening, the IOTA team shut IOTA down. Flick of a switch. That's crazy, man. That is so centralized it hurts my brain. They can just shut the entire network down just like that. It's shocking, really, when you think about it. And I know there's the whole Quarticide thing happening at some point in the future, but man, that's crazy. Bitcoin, dude. Bitcoin. Anyway, the team is telling any IOTA holders to not open their Trinity wallets. So be careful out there if you're an IOTA holder. And finally today, to finish up on a bit of a softer note, Spanish football team FC Barcelona has teamed up with Chili's to create a blockchain-based token for the club. Barcelona joins other famous clubs like Italy's Juventus and France's Paris Saint-Germain, which all have their own Chili's tokens. The tokens are all about new ways to try to engage fans and to reward fans for being such loyal members of those clubs. And while I'm not personally a sports fan, I can definitely look at something like this and see the real viral adoption potential of involving really big communities of really engaged sports fans into the crypto ecosystem via these kinds of tokens, which is definitely some cool stuff. Any adoption, we'll take adoption. Take adoption where you can get it. Anyway, that is all for today. I hope that you're having an awesome day out there. Let me know down below in the comment section, what do you think about all these crazy regulations that we see being proposed and all this kind of oversight onto the crypto economy from particularly US regulators? Let me know down below. Always interested to know your opinion on what is going on in crypto. And if you did enjoy today's video, hit that thumbs up button. Make sure to subscribe to the channel if you are new around here. Long live the blockchain. And peace out till next time.